Food price inflation isn't great for consumers, but it seems to have boosted PepsiCo stock. Despite price hikes, people continue to consume PepsiCo's snack products. Furthermore, PepsiCo has excellent track records of earnings beats and dividend increases. Investors should think about adding some PepsiCo stock shares to their portfolios. Let's dive in. PepsiCo's Fizz factor. Here's why PepsiCo stock is a refreshing choice in 2023. Welcome to Timely Investment Research. If you're seeking fast growth stocks in 2023, PepsiCo stock probably isn't what you're looking for. However, as a rock-solid defensive play that should appeal to dividend investors of all stripes. Chances are excellent that you're familiar with PepsiCo's portfolio of famous beverage and food brands. Even during times of economic turmoil, families will continue to indulge in snacks and a soda. What about times of sticky inflation, though? Will people continue to buy PepsiCo's products even if they cost more? Actually, the answer is definitely yes, and that's good news for PepsiCo and its shareholders. Reasons to consider PepsiCo stock. First and foremost, investors can counterbalance their hyper-growth stocks with a share position in Pepsi. Unlike some tech market high flyers, PepsiCo stock holds up fairly well during times of economic turmoil. PepsiCo has a terrific track record of earnings per share beats. This track record was upheld in 2023's second quarter when PepsiCo earned $2.09 per share, beating Wall Street's call for $1.96 per share. PepsiCo has consistently increased its dividend payouts year after year. The company currently pays a forward annual dividend yield of 2.65%, which surpasses the sector average dividend yield of 2.125%. And, by the way, PepsiCo stock is down from its 52-week high of nearly $200. This should pique the interest of value seekers and contrarian investors. People are willing to pay more for PepsiCo snacks. Not long ago, the Wall Street Journal reported on the phenomenon of snack producers, such as PepsiCo, raising their prices. We can blame inflation, supply chain disruptions, or any other contributing factors, but snack price increases are probably here to stay. Yet, the American consumer has been resilient in the face of persistent price inflation. Evidently, people are willing to pay for PepsiCo snacks, such as Doritos and Cheetos, even after the prices go up. Thus, as the Wall Street Journal put it, PepsiCo's quarterly results showed strong growth in sales and profit as consumers continued to shrug off price increases of these snack products. It might seem counterintuitive, but inflation didn't seem to hurt PepsiCo's bottom line and may have even boosted it. We already mentioned PepsiCo's second quarter 2023 earnings per share beat. It's also worth noting that PepsiCo generated $22.3 billion in quarterly revenue, surpassing Wall Street's forecast of $21.7 billion. Looking ahead, PepsiCo raised its full-year 2023 organic revenue growth outlook to 10% from its previous guidance of 8% growth. Feeling defensive? Take a look at PepsiCo stock. PepsiCo isn't trying to make its shareholders rich overnight. Rather, the company is dedicated to rewarding its loyal investors for the long run. Granted, it might seem counterintuitive that consumers will tolerate snack price increases. Yet, apparently they're paying more for these products, and PepsiCo's results and forward guidance reflect the company's convincing performance and optimism. So don't assume that sticky food price inflation is an insurmountable problem for PepsiCo in 2023. Ultimately, it might not appeal to investors seeking hypergrowth, but it's a solid defensive play with decent dividends as a nice bonus. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.